Good morning, YouTube. This is Okie Prepster here. Just kind of wanted to go over a few small things that I had found researching some information this morning on the inflation rates and some of the markers that are being reported on. I found this one off of International Business Times. It was actually marked March 23rd, 2012. And it's a report by an independent economist named Andy Zaye. And he warns of a global inflation disaster coming. So the Federal Reserve didn't see the U.S. subprime mortgage crisis coming. Well, yes, they did. The European Central Bank was clueless about the Eurozone's debt crisis before it hit. Right. Says there is little reason then to believe that the regulators will see the coming global inflation disaster, he reports. Zaye based his prediction on the causal relationship between money and inflation. Keep printing it, keep printing it, keep printing it. Right. So it says, in the years since the 2008 global financial crisis, the United States and Europe have maintained very loose monetary policy. And Japan has recently expanded its own stimulus, said James Bullard, president of the Federal Reserve Bank of St. Louis. The Fed's balance on hand of assets, i.e. fiat money, that they've been purchasing back, monetizing, has more than tripled just since September 2008. So that's one source. Well, let's go hear what Mr. Bullard from the St. Louis Fed has to say even more. This is actually the same day, Friday, March 23rd, reported. It says the Fed's Bullard warns of a global inflation threat. It takes a long, long time to fix. It says the world's richest countries will battle inflation for years to come if they bungle the timing of, wait for it, tightening the money supply. To spur recovery, central banks in the U.S. and Europe and elsewhere have flooded the economies with liquidity, although such policies often fuel inflation down the road. Not that far down the road. If they wait too long for fear of spooking the economy, inflation will become a problem for a long time. Bullard said to Bloomberg News, once inflation gets out of control, it takes a very long, long time to fix it. Man, these guys should get gold stars for having a keen sense of the obvious. Alright, so we've got an independent economist from the international world. We've got someone from the Fed. The Fed saying tighten the money supply. If that's not newsworthy, I don't know what is. It's probably been run out of town. Well, let's go hear from Big Brother Ben. Ben Bernanke. This is reported March 27th from the AP News. Bernanke says U.S. unemployment could stay high. Federal Reserve Chairman Ben Bernanke says that without faster economic growth, it could take a few more years for U.S. unemployment to decline to normal rates. Really? Oh, thank you, Captain Obvious. But Ben Bernanke said the economy isn't strong enough to continue to reduce unemployment quickly. And he said unemployment has declined from 9% all the way down to 8.3%. Well, a healthy level is roughly between 5 and 6%. Yeah, like we're going to be there anytime soon. He says the recent news has been good, but I think we need to be cautious and make sure this is sustainable. Bernanke said to Diane Sawyer, we haven't quite gotten to the point where we can be completely confident that we're on track for a full recovery. Doesn't that just inspire you? Now, despite the loose monetary policy, Mr. Big Brother Ben, that you guys have just been flowing left, right, and center, everyone else is saying, even someone from St. Louis, tighten the money supply. Get your stuff in order. Quit being fools. At the end of the AP article, it does say, amazingly enough, Ben Bernanke said the Fed is keeping open its options for taking further action to aid the economy, including another possible round of bond buying. Such a step would be intended to try and further lower borrowing costs. I know. Let's keep doing the same thing we've been doing and expect a different result. You know what Einstein called that? Insanity! Alright, well let's go to Mr. Hare himself. Donald Trump. This is from moneynews.com. This is from back March 13th. Massive inflation is poised to strike the U.S. economy, and the best hedge against galloping prices won't be gold, but real estate. Oh, says the real estate mogul. Yeah, there's no conflict of interest there whatsoever. The bottom line is I love real estate, Trump told CNBC. I like it because I think you're going to have a massive inflation at some point. And to me, real estate is much better hedge against inflation than gold, which you can't touch. Well, frankly, Mr. Trump, then you're buying the wrong type of gold. You buy a gold certificate or you get into a gold pool, you're an idiot. If you're smart enough to get a tangible asset, then you're in a better position than any real estate will ever be. Oh, you just gotta love it. And then I decided to go over to the Silver Institute, Commodity Online. Silver outperforms gold, platinum, and palladium so far in 2012. Sturdy investment demand has pushed the silver price up 20% in the first 10 weeks of 2012. This was reported on March 9th. And it's outperforming platinum, palladium, and gold during that period, Silver Institute said in a research note. According to the Institute, investors are increasingly acquire silver in many forms. Globally, silver-based exchange trade funds account for 586 million ounces. Really? Well, guess what, folks? There's only such a limited supply of silver right now, and it's bottlenecking. And it's going to lose its ability to meet the demand because of production problems, bottlenecking, limited above-ground available silver. So I find it interesting that we have warnings of inflation coming. We have warnings of potential further Fed actions to prevent the problem by doing the same thing. I know we're all shocked. And then we have Mr. Donald Trump saying, no, don't buy gold. Don't be an idiot. Don't get something you can hold on to. Buy real estate. Right. Any of you really think that the real estate market's dropped yet? It's hit the very bottom? I don't think so. Well, folks, whether you choose to buy gold or silver, inflation is coming. It is coming. Hard, fast, and painful. Thought I'd share that. If you got the chance, I'd invest.